Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Friday, March 21st, 2025. It's 10:04 a.m. Eastern Time, so I'm starting the video. I'll do a brief update on the equity markets. I want to do a little bit of a deep dive into gold, silver, and the mining stocks. Threw that one as a trade idea out to you yesterday. It went on to trigger, so it is an official short trade. That's all of them: silver, gold, GDX, because gold broke down. I'll get to that in a second, and then we're going to look at some of the individual miners, my big mining stocks. Time permitting, I'd like to cover a couple other commodities too. I always say this, I say it often, but the markets are obviously what I cover the most. Stock market. Now, everybody loves trading the markets. You go to a cocktail party, you want to talk about the stock market and your Nvidia and all that. But in my opinion, I say this often, it should be only one of several positions, a diversified portfolio. In my opinion, and I feel strong on this, is every bit as important in swing trading as it is in long-term investing. In other words, you don't just only trade. I mean, some people do, and if you're really good at that and that's what you want to hyper-focus on, that's fine. But I like, me personally, I like to spread my bets because on any given day, one thing's down, two things are down, but then you have something else up, and it helps smooth out the bumps. So uncorrelated assets are the way to go. All right, let's dive into the charts here. IWM. Yeah, I got that one out to you today. That was the breakout, the long signal. We hit our first target there for almost a 4%. I think it was a little shy of a 4% profit from there. Expected a pullback. That's what we got. And I gave you that. I didn't move this line. That was the first target initially. And I just want to say we're there. What you have to look at. I just left it there for consistency. But when you establish a new reaction low, we basically broke that level, came back tested it, but then established a new low. So that's really where the support is. Trend line drawing and support and resistance levels, I would say, is more of an art than a science, but I often say this. Traders focus on pivot lows, reaction lows, and that's where you come up with price and support levels. Before I had it here and here, and I put a higher weighting on the more recent ones than the previous ones. So for all intents and purposes, that's what this is a pullback to that previous reaction low or support. Roughly, still that same first target, and it either works or it doesn't work, and that's a simple thing. When you take shots like that, you buy it, pull back to support with a stop somewhat below. The markets still are off the recent lows, but I'll tell you, they feel like, and today's Friday, typically on Friday, you get nervousness. And the problem is if you have more shorts in the market, that nervousness by the end of the day, those that are concerned about going heavy or keeping positions into the weekend, if the market's heavily shorted right now, you're going to have short covering. You can actually have a pop into the close. But, in recent weeks, we have a lot of longs until they realize, this is more than just a run-of-the-mill pullback. You get that selling. So I don't have a strong opinion, but I'm going to still maintain my bounce targets. We're still off the lows. I can tell you this market feels like it's got a wet blanket on it, and not just that cheap polyester blanket you buy at Walmart. This thing feels like a thick wool blanket just sopping wet with water, meaning every time you start to get a rally, and more important, it's not just a rallies get sold into, but breakouts. Like this is QQQ. Let me go to, I think, a 15-minute chart's a little clearer. Yeah, this is my 15-minute chart. So you had the break of the primary trend line here. Okay, my apologies. I had to take a phone call there. Paused for about 5 minutes and can't even remember. I think I was talking about the whole wet blanket thing. Market feeling heavy, but again, it's off the lows. So what I was getting at, yeah, that's right. We had a breakout of the first and then secondary trend line to BOD. Then that trading range, that basing pattern right there. Initial breakout just had a pullback back test. We hit that level. Can't remember if that was the first target I established that line afterwards because we had a reaction there. Anyway, sold, fell back down in there, rallied back up, tried again at that high, another rejection. But at the end of the day, we are still off the lows. This is, you can see support here, about 473.90 right there. We just hit that. I had a little minor trend line here that we gapped down below this morning. That triggered, in my opinion, there was really no news this morning. I think FedEx reported, Nike. But other than that, nothing on the economic calendar. One of the Fed bobbleheads was cackling, but that didn't really. He just said the same thing that Powell's been saying. They're happy where rates are right now, and blah, blah, blah. That's it, guys. So let's not overthink it. As of now, we're still off the lows. We're still making a series of not by a lot, but higher lows and higher highs. But again, we need to pop this level here. This is the magic level now that needs to go. It's Friday. We'll see what happens. But again, these are right now. If you want to see the two levels today, that one here we're at support, pretty well defined, cap there, and then this one here. And again, remember it's Friday, so whatever you take home today, even if you're a futures trader, you're stuck with until at least Sunday evening for you futures traders, and then for you stock and ETF traders, effectively Monday morning when the liquidity comes in. So that's that. And that's it. Remember, on the weekly chart, nothing has changed. Other than in the last few weeks, it's reaffirmed my longer term bearish downside targets and scenario. It's just a matter, we're going to get a snapback rally, which is still very much in play. Let me just go over this real quick. I mentioned to somebody yesterday in the comment section that I had quite a few. I'm just rifling through my 60-minute charts here. This is Apple, really kind of May-ish. Apple, I don't know if they've been firing off. They've got the biggest buyback program in history. Are they buying the shares? Are they holding off? Who knows? All I can tell you is they, can't gets a little rally going. It's also off the lows. I don't have a strong opinion right here on this chart. Daily and weekly, it's nothing but bearish to me. It's broken down. So again, to me, it's not a matter of there's no guarantees, but I still believe we're going a lot lower. I'm still favoring a kickback rally as of now to those targets I've given you for the last, week and a half. Oh, and this is it. So I mentioned this, somebody, quite a few, I have several, I said, of the Mag 7, Mag 8 stocks coming off divergent lows. Microsoft, one of the ugliest charts, longer term, daily, weeklies. But on the 60-minute, you've got nice positive divergence. You had a breakout. But again, you can see that breakout got sold into another breakout. We are currently back testing, so it hasn't yet failed. And there's comparable, similar uptrend line roughly on QQQ. So there's still the potential for rally if these divergences play out. There's Microsoft. NVIDIA came off a divergent low, but we've had a heck of a rally. It's been 16, 17%. So I've established a new downtrend line here today, added that. If I can pop that, maybe a little more. Near term, I don't have much of an opinion on it. Amazon, also big market leader, crowd favorite, big positive divergence on the 60. There's a breakout and effectively a back test. So if it can hold the back test, Amazon has room to rally. And so I am still maintaining those potential bounce targets. And that's kind of my plan is now today's Friday. So like I told you last Friday, and I believe the Friday before, being the RR is not very attractive. This market could certainly take another dump down, big leg down, but the RR isn't that attractive. One thing that we've done, by the way, so let me just follow up. Google breakout back test, right? Positive divergence. Meta positive divergence. Tempted a little breakout, but it's so brief and minor. I don't even think you didn't have a solid close. Basically, it's another rejection at the downtrend line. But you might want to replicate that downtrend line off the highs. And so again, if we can start popping these, so I just showed you several of the Mag 7 stocks coming off divergent lows and taking out downtrend line or poised to take out downtrend lines. Tesla effectively put in, for all intents and purposes, about an equal low with positive divergence there. And I'm going to move this line up right now. Right there. That's the level it needs to pop to run further. 251, about 251.30. However, again, it's that wet blanket thing. Market's hasn't gone down now for the last couple weeks, but it's not going up either. It wants to try to rally, and every time it starts to rally, it's met with more selling. So, again, still favor the upside scenario. Near term, not married to it, and no matter what happens today, I'll be lightening things up by the close. I'm still positioned long for a near term rally to the next targets. Okay, enough on the stock market. Again, we haven't gone anywhere for several days. There it is. When you look at a daily chart, So this is it. So we stopped falling. We're not really going up. We're consolidating. Potential bullish PPO, low level bullish PPO crossover. Potential. Sometimes you try to make that crossover and you get rejected. That one was more of a, it stayed trying to cross for a while and finally made the cross. It wasn't a real rejection. And we did the same thing. We consolidated sideways and then that resulted in a rally up. Low level bullish PPO crossover. So I'm just circling them all and you can see what happened there. Last time before that we had especially down this deep of a level. Here's one example. Tried to make a cross right there, even made a cross right there, but then got rejected and we went a marginal new and still a divergent low, then made the bullish PPO crossover and it marked the lows, the end of the bear market back in 2022 right there. But you can see the PPO and the RSI, they get buried in bear markets. So I much prefer to see divergent lows, which we had here, here, and here, and we gamed each of those rallies with near impunity back in that bear market, going short into them, reversing, going long, and that one as well. So we don't have that right now. But we do have that potential bullish PPO crossover. And again, you get a little kickback rally, hit the targets or not. Now let's talk about the other stuff because remember, the stock market is one thing, one position. Gold, we definitely broke down. So I'll give you this yesterday. We're at that first support / target on GLD. Quick swoon down. Like the futures the best. That's the one I gave you, and that's the kind of was the official trigger for the trade. Or I should say trades plural. So there was your sell signal yesterday right there. Shortly after I posted it, there's the breakdown. Let me try to quantify it for you right now. So we're profitable by about, and remember, me personally, I usually will trade in lieu of gold. Sometimes I'll trade gold for whatever reasons, gold futures, but I like silver or GDX, just get more bang for your buck. So there's T1, we're coming up on there. T2, T3, again, one of my favorite trades right now. And that's certainly, again, and then you could see yesterday in the post I gave you, I also had a minor support level. So after the breakdown, it was at the 3181. You can look at that level. There was a breakdown. We hit that support level, what I'll often refer to as a BOD, benefit that out, have one last hurrah, hit it again, one last little hurrah, and then took it out. So that is all day long a sell signal. Take it, don't take it, up to you. But again, one of my favorites. There's that's it. Nope, that's not it. Gold, trying to move down. There it is. So now you can see gold. Let's go to silver. Silver, bearish rising wedge break. First target hit bounce. Second target support bounce. Back to the first. This is how you trade. This is why I give you these levels. Each one, you're going to get a most likely reaction. Then if you bounce back, support once broken becomes resistance. That provides an objective short entry right there. Once that level is taken out, that bounce back provide an objective short entry. And right now we are right on the 336.86 target that I gave you. So most like a reaction here. Then once that level goes, that should open the door down there. GDX, let's talk GDX because that's probably the best. You can, with GDX, you can short it if you want, even in a non-margin account. You can use Dust, which is a 2-time leveraged ETF for the miners. And so it's just going to be GDX in reverse. Just make sure to account for that 2-time leverage. The miners are pretty volatile anyways. You don't really need leverage. To the best of my knowledge, they don't make a one-time or non-leveraged short ETF. So Dust is going to be your option if you want to do that, if you don't want to outright short GDX. So we're at my first price target now. They're 43.79, down 2.15% today. Again, the sell signal was yesterday, so you should be at least that profitable now, or about that. Next target and then next target there. So it works like that. I just showed you silver at support, GDX at support. So reaction likely. You can take quick profits if you're an active trader and you want to game these things. Where to? Probably about right there. I'll add it for you right now. You can see this was a little support shelf, but also trade off. I always say trading GDX without looking at gold or silver, you're missing the whole thing. Gold GDX is simply going to follow gold and silver, but gold primarily. It's just going to move more. So you're either going to be right, and this is my logic for usually trading GDX or silver and blue. I'm either going to be right or wrong on my call on gold, and why not get paid? So GDX is going to go up and down more in percentage terms than gold, and in the same direction. So there it is. So if hit from that breakdown, it's going to be about a 7% drop. And there might be more. That's why I do these videos, guys. They're long-winded, but let's just dive into it. Let's look at there's GDX on the daily chart. Okay, this is, as you can see, a divergent high. I'm going to duplicate that line. Depending on a bull trend, you get these divergent highs, and you might say, yeah, but it goes up, up, up. Yeah, each one of those. And remember, we've traded a lot of these. I've highlighted back here, I was more active. You notice how I haven't put a lot of posts lately on gold and GDX until yesterday, because I watch. I wait patiently. You might not know it, but I look at this every single day. I'm looking at gold, silver, Bitcoin, a lot of commodities. And if I literally covered everything that I look at every day, these videos would be 5 hours. So I try to wait, and then highlight to you what's relevant, what's setting up as a trade idea, whether it's actionable at that time or pending an entry. So now these were all, again, the point is, even in an uptrend, you can either sidestep, if you're a bull and long, this 12% drop. These are all about 10. These are double-digit drops. First one was 12. This one was 24%. And then divergent low, and I've highlighted most of these. I was very bullish and long the miners back here. Gave you 4 initial targets, all which were hit. So we were long there. We were long at that low. I believe we were short at that high, and we are short now. Now, what I'm going to do here is show you this is the first divergent high that I have since this one back here, where we did fall, where GDX fell 24%. And again, even on these smaller ones, the drops were usually at least in the low double digits. So let's take a look at the rest of them. As I often say, an index or a sector, in this case the gold mining sector, is simply a sum of its parts. And in many cases, I'll also go on to say it's a weighted sum of its parts. Some sectors and indexes are weighted to the higher market cap components have a higher weighting. And so I usually sort my, I have all my watch lists. When I load an ETF or a sector or an index, it's going to give me the components here, and I sort them by market cap. So Newmont's the biggest in the group, followed by AEM, WPM, gold. You can see there. So I'm just going to rifle through a few of these relatively quickly. This is twofold. I'm doing this for 2 reasons. Number one, if you're gold bug or you have positions, I'm giving you an individual analysis. You can either, as a bull or a long, maybe sidestep some losses if we get these sell signals coming up, additional sell signals. I'll show you price targets, and you can also turn around and short them. Or the reason I like to do this as well, you might have a zero desire to trade the miners individually. I can tell you they're highly correlated. So unlike some other sectors, healthcare is a good example. There's a whole potpourri mix of companies with whole different pipelines and products and all that. Some can go up at any point in time while others are going down. The miners, they are all on a good day, they're all green, and on a bad day, they're all red. So high correlation. Translation, guys, you can keep it very simple and just trade GDX. But if you want to trade the individuals, and again, the other reason is when I see a sector that's setting up bullish or bearish, I like to look at the components because I want to be able to make a case that the majority of stocks, especially the biggest ones, also align with that. Because I have seen cases on certain ETFs, sector ETFs, where the sector ETFs look like a sell, maybe it broke support, but then I go in, dig in, and most of the top components are still at support and haven't yet broken. And therefore, I might not short the sector. I want to wait to see the leaders break down. Hopefully that makes sense to you. So here we go. Newmont. I don't have the DHs and divergent lows. You can see my charts. This is a divergent low. These are big swings. This is what I do. Swing trading. 48% from that divergent high, and then followed by a sell signal that came right after. The drop was, to the next divergent low was 24%. And then that was a divergent low. We rallied 25. If you just catch a fraction of these trends, you're blowing away any gold mining or gold or precious metals mutual fund, and that's what we try to do here. I try to not catch, well, I try. Many cases we're in long at the bottom or short at the top, but you can see the trends, and these guys trade so well to the technicals, guys. That's why I do these videos. So that was a clear and big divergent high, right? and that divergent high was big. And typically, the bigger the divergence, the bigger the ensuing move. Not always, but usually 38% drop. So imagine if you were a Newmont bull and you heeded the warning. And if you go back, I probably was covering it here. You can check all of my posts are archived on the site. So after I do this post, you go to the bottom. You can see all the symbol tags that I cover in this video. So you'll see NEM. You click on NEM, Newmont. It's going to load all posts covered in Newmont chronologically. So you can go back and look at the other ones. This was a beautiful bullish divergent low, positive divergence. And there, there's your breakout of the bullish falling wedge. And we've rallied 30%. Now we've come full circle. We have a divergent high. It is, I make a lot of terms up in trading and technical analysis. It's not what I call confirmed divergence. I need to see the PPO make a bearish crossover, meaning the PPO line crosses down below the signal line or the white line. That effectively puts in the lower high. Why? Because it's still, trend is still up. The PPO is still pointing higher. And if we continue up, then we no longer have divergence. So again, it's just something I made up years ago. Just something I like to see. However, I can look at it. It looks pretty good. PPO is rolled down. The PPO is starting to curl down. RSI is turned down. And also, we're right just shy of resistance. So if it wants to make another thrust up, fine with that. It's not going to change my outlook. It's just going to put a marginal new and still divergent high. But so bigger picture, guys. So this forms a bearish rising wedge pattern. Whether it develops further or not, there's an uptrend line in which to trigger a more powerful sell signal. But it's also a near-term pullback target to me. You have price support and that uptrend line right here. So if so, before all said and done, Newmont's going to correct about 7%. And that's going to kind of give you an idea how much GDX might drop, right? And then we'll probably bounce there. I don't think we'd go straight down through there, but it's possible. I'm just giving you key levels to watch. All right, AEM. AEM, big negative divergence. Again, first time since we had negative divergence right here. Yes, even in a bull trend, these divergent highs are good for nice swing trades, 15+% correction. And most of it came pretty quick. But you can see a nice trend line. Again, bearish rising wedge forming. There's a little minor trend line there. When you see something like that, you drill down to the 60s, and that kind of gets you in a little quicker. I don't have that marked up, but you can see it right there. Either way, so there's another target. You have a previous reaction high. Some of these charts I'm just marking up now, updating. And now, if this trend line breaks, remember, this is a divergent high. If this trend line breaks, it could send us all the way back down. I'm going to borrow this line and move it up right about there. And that's a potential target, too, for a deeper correction if the trend line breaks. That'd be about an 18% drop in AEM. Again, second largest component. Divergent high right there. This one is WPM. Wheat and precious metals, says gold. But I know they also, I believe it's also a big silver miner as well, producing a lot of silver. Divergent high right there. Very well-defined trend line, right on the trend line now. If it breaks, boom, down. I'll probably take it down to that previous reaction high. Again, so this is a common theme here. It's time, and somebody replied, hey, Randy, thank you. I'm looking to get into gold. Just don't want to chase. Yeah, right now is not a good time to chase. In fact, I think it's a good time to short, but that's just me. All right, so there's that one. Gold, is it Barrett Gold? This one always makes me wonder how many newbies bought this symbol thinking they were buying a gold ETF because Barrett Gold grabbed that ticker way back a long time ago. Either way, it's a big miner, and there's a beautiful bearish rising wedge pattern, guys. That is complete with the uptrend line, the bottom part of the wedge, the divergence right there. Divergent high right here. By the time that divergence finally played out, it was good for a 29% drop. That drop ended with, you got it, positive, aka bullish divergence, and resulted in this rally. So there it is. So you can see a lot of these gold mining stocks have been horrible investments, like Barrick Gold, for example. You've gone nowhere for years. Look at my year break lines. This is 2024, the beginning of 2023. So this stock is a swing trader's dream. That's why, I get these things out to you when I see these setups forming in the miners. Hit it, swing it, get in, out, get your 10, 12, 15, 20, 30, 40%, whatever it is, and wait for the next setup or position reverse if the time is right. A lot of these trends just ended with started with a divergent high or low and ended, again, they're just almost like an EKG, and you just swing these guys up, down, But if you're investing in these, you're spinning your wheels. The stock is trading today where it was back. I can go back as far as I want. 2020, COVID, back there right before COVID started and right after COVID ended, and it's gone pretty much nowhere since. But it's been just printing money if you swing trade it. FNV, divergent high. You got it. So what I'm doing here is beating a dead horse, but it makes sense. Because remember, I told you, birds of a feather flock together in this sector. It is not random coincidence that just about all these components, including GDX and gold, have divergent highs right now. And like I said, a lot of them have these trend lines. The buyers will step in if most of these hit these trend lines at the same time collectively. But if those trend lines break, the takeaway from this video is right now I've given you some, on GDX and gold and silver, some near-term pullback targets. But the potential is there if some of these primary uptrend lines go for a much deeper correction. Gold is a very overcrowded, overloved trade right now. Let me repeat that. It reminds me of Bitcoin a year ago. Everybody's been on the gold wagon. Central banks are buying, global governments are buying, global central banks, retail crowds buying because of that. So just be careful there. It's a very, very crowded. That's not divergence. That's just, I was playing around with that line. All right, so you can see all my levels. The rest I didn't mark up. This one I can just keep going. I'm beating a dead horse. That's actually big divergence. It really carries back all the way from this point here. And when I see divergence this long that spans almost a year on the daily charts, then you can just go to a weekly chart and you'll see it, and it shows pretty well there as well. I don't have it marked up, but I'll do that right now for you. There's the weekly divergence. This is KGC. There's your uptrend line. Last time we had some divergence on the RSI there, a little bit there on the PPO at the end, and that's that. So that's kind of the state of the nation and the miners. There's an uptrend line right there I need to add. There's a primary uptrend line, nice one. And what you do, set alerts on all these. So again, if you're a bull and you want to keep, to me, it's picking up nickels in front of a steamroller. I think we'll get another reaction probably off these trend lines, but maybe not. When you get this long in the tooth, it was like the stock market. I've been talking about that for a long time. On QQQ and SPY, the divergence kept growing and growing and growing. And I said, look, you can keep buying these pullbacks to support, but you're picking up nickels in front of a steamroller, and that's all it was in the stock market. You make these little tiny marginal new highs, and then boom, once the floodgates broke, meaning in the stock market, the trading range I was highlighting forever and a day, exactly what even that failed breakout, that's when I predicted probably be a relatively swift move down to and through. I said it before it happened that my expectation is no more, this was long in the tooth, and that once we got that failed breakout there, it'd probably send us down to and below. And that's what happened. So in one fell swoop, we did that. Is it a big bear flag or not? I don't know. My positioning right now. I'd love to see another kick up to the 200s. That's what I'm kind of leaning towards. Let's see what we do today. And of course, we're not going to know till next week. I'm getting sidetracked here. Let me get back to GDX. All right, so that's it. What did I cover? I went down to, I think I went down to KGC, AGI. Again, you can see, you can do it yourself. Just go look at these. You're going to see divergence on almost all of them. Try to draw some uptrend lines off the lows, and gives you near-term pullback targets. So what happens if most of these hit at the same time, these trend lines are in close proximity, then that's a good area to cover shorts, reverse game for a bounce. And or, if you think they're going to break, and they might, then just set your stops, lower your stops to protect profits and hold out for a breakdown. But you would probably get one last hurrah. You can see, like here, there was no hurrah. You hit the trend line, danced on it for 3 days, then you gap down below it, and then you drop. Royal Gold, RGLD, same story. Okay. If you want any more, if you are interested in trading individual mining stocks, or if you already own some and you want an update, let me know. I can do this all day long, and I will probably do this after I stop the video. I tend to go through these, and personally, a lot of times I will short the most bearish when I think the sector is a short, And when I'm bullish and the sector's along, I will look and sniff out the most bullish. Tend to like the silver miners when they can really run. This is one also PAS, gold and silver, and it moves pretty big when it does. We were here, I believe we were long off that breakout right there. I'd have to check. Look at that trend has been 124%. So a lot of these, the silver miners tend to move more than the gold miners. All right, guys, I'm going to stop it here. I'll take a look at these myself. If any, like I said, if I see any true standouts, but it's just knowing kind of the folks on this site, I think it's most people want to just keep it easy, especially if you're juggling a lot of balls in the air. In other words, if you're trading the markets, if you're trading Bitcoin, if you're trading wheat and corn, soybeans, and natural gas right now and other things, that's where having an ETF is pretty simple. It's you don't have to worry about earnings and all that other stuff that you have to do when you trade individual stocks. All right, before I leave this, I am just going to point out that I see something I saw in some of the others. I do see potential for even bigger divergence that's been building for a long time on GDX. So again, to reiterate, I've thrown these out to you as short-term pullback trade ideas, but when I look, and here's my weekly chart right here, the potential for a much bigger drop is certainly priced in. And let me end it with this. If the stock market takes it on the chin anytime in the coming months, like really takes it on the chin, you'll know it when you see it. I always say this, that there's times I've seen quite a bit in bear, think 2008, think probably COVID, I believe, where the market's just getting hammered and gold's going up, or at least holding up relatively well as a flight to safety bid, because everyone's running around like a chicken with their head cut off. Institutions, individuals, they don't know where to put their money, so money goes into gold, and yet GDX is falling. Remember, GDX, gold mining stocks, although they do benefit from rising gold prices, at the end of the day, they are equities, they are companies. They're not gold itself, and so they do have expenses. When crude prices go up, that energy costs go up, that hurts them. But also they tend to get caught up in broad-based sell-offs, because when the market's in that meltdown mode, everything with a ticker just about gets sold. These are, at the end of the day, companies, and so just keep that in mind. That's when you do get that, sometimes that disconnect between GDX following gold in the same direction, just going up or down more. And so we have a really bad bear market coming up this year, as I suspect we probably will. Then at some point, the miners may go down pretty hard, irrespective of what gold is doing. I'm just going to move that up right there right now. Okay, I'm going to wrap it up here. This has been Randy Finney with Right Side of the Chart. Anything else stands out, I'll get an update to you. My thoughts on wheat, corn, natural gas, soybeans, with the other stuff that I've been putting out as long trade ideas. I'll do a separate video on commodities shortly. All right. So once again, this has been Randy Finney with Right Side of the Chart. Have a great day.